Hey everybody, I'm going to try and give you some help with the Consolidated Balance Sheet Working Papers. So we know that Brooks acquired an 80% share in the subsidiary Dunn, and now we need to do two things. We need to eliminate the parent's investment in the subsidiary, and we need to allocate the fair value adjustment, which we know was related to plant assets. At the same time, we're also going to recognize the non-controlling interest. So the first thing I'm going to do is I'm going to get rid of the equity accounts from Dunn. So I'm going to debit common stock. I'm going to debit other contributed capital, and I'm going to debit retained earnings. So now I have eliminated those equity accounts. We know that we had a difference between implied and book value that was attributed to plant assets of $25,850, and that was identified in the first part of the problem. And I've linked that video in the description below. And so now I'm going to debit this difference between implied and book value for the 25,850. This removes the parent's investment account. So we're going to get rid of the investment account of $131,000. We've eliminated that. And we've gotten rid of the equity accounts, and we've taken care of excess fair value, except what we know is there was $32,750 in non-controlling interest. So I'm going to go ahead and recognize that as my 32,750 here, and I'm going to allocate it to non-controlling interest. The last thing I need to do is I need to allocate the fair value adjustment. And this is going to reflect the fair value increase in Dunn's plant assets that was identified during the acquisition by simply adjusting the book value of the assets to the fair value as part of this consolidation. I'm going to debit plant assets for the 25,850, and I'm going to credit that difference between implied and book. That 25,850, students sometimes get confused about why we make that entry, but the 25,850 was really in a temporary holding account to the specific asset being adjusted. In this case, it was plant assets. So the entry we just made updates the plant assets to reflect their fair value. And so I know that my assets balance with my equity and liabilities at 426,940, and those are all the elimination and adjustment entries that we need to make in order to be done. I hope this helps, and thanks for watching.